Hey guys, welcome back to the channel. If you are new around here, welcome. And if you are a returning subscriber, thank you so much for coming back. I do appreciate you guys being here. So we're going to be talking about the 5 monthly dividends, well, except for one of them, positions that we have over 100 shares in. So 100 shares is like the big milestone for us in a lot of our positions. Like if we can get to 100 shares and let's say realty income, then we feel like we're really making progress with our investing goals, right? A lot of us are on this journey. We're starting with 1 share and we're trying to get like to that big goal. Okay. And for my husband and I, 100 shares is like the big goal, though we have over 100 shares in many of the positions that I'm going to talk to you about today. But I just wanted to stress that point that, you may see this and you're like, oh my goodness, I'm just at 2 shares, 5 shares, 10 shares. Let me just tell you, we started with 1 share as well. And like some of these, half a share. So again, it's about being consistent. You want to make sure that you set share size goals for yourselves. That really helped me so much because instead of me saying, you know what, I just want 100 shares, I really made my goals a little bit smaller, right? So that they could be more achievable and attainable. So I said, okay, I want to get 5 shares first in realty income. Then I wanted to work on 10, then 25, then 50, 75, and then 100. And I can tell you it takes time. I just did a video talking about 5 ways that you can increase your dividend income faster. I'll have it somewhere up on the screen. Make sure you go and check it out after you check out this video. But one of the things that I did talk about in that video was if you want to increase your dividends faster, you need to be consistent. And when you have the opportunity, dump a lot of money into that particular stock or particular fund. So tax refund time, if you're getting a bonus, if you're getting a raise or a pay increase, those are great opportunities to, maybe catch up a little bit quicker on your goals, right? Because you're dumping, a lump sum payment outside of your normal payments into the particular stock or the particular fund. And don't forget, if you're looking for ways to track your dividend progress in a very easy and simple format, check out my book of dividends. And don't forget, I am running a sale. It ends Saturday, April 1st, 15% off all of the products on my website. If you need like services or help, one-on-ones, private groups, they're automatically marked down until April 1st as well. And the study groups are back. So make sure you sign up for those. Seating is limited. So the first stock I want to tell you about, and I'm going to switch between Robinhood and Interactive Brokers, is realty income and Robinhood. So we have 123.42 shares. You should be able to see it right there. Move my face. But yeah, we have 123.42 shares here in Robinhood. So when you add that up, that's about $7,537.29 in terms of how much that's valued at. Now you can see right now that our total return is down. We're down about 9%. Why? Because the stock market is falling. But I'm telling myself, I'm buying realty income for 5-10 years from now. I'm not buying it to sell next week. I'm not trading it. I'm not shorting it. I'm buying and holding it and collecting the dividend while I am waiting. So I'm just dollar cost averaging as the market is down. I'm getting realty income at a really good price. I really do like this REIT because it doesn't really focuses on residential real estate, right? Residential real estate is the one that's being affected by, primarily by the increased interest rates from the Fed. But realty income has tenants. Okay. So if you are going to a Target or a Dollar Tree, Target and Dollar Tree does not own the buildings that they are in. They pay rent to real estate companies like Realty Income. So Realty Income is big into commercial real estate and industrial real estate. So like warehouses, things like that. So if you are going to a CVS, if you're going to a Target, a Lowe's, a Walmart, an Amazon storage facility, guess what? 9 times out of 10, they're paying rent to places like Realty Income. So I really do like the business structure. Check out Realty Income's website. They are actually known as the monthly dividend company. It's really crazy, but I love it. Check out their website. I think you guys would enjoy it. I talk about Realty Income so much on this channel, but we have 123.42 shares here in Robinhood. Okay, so we're done with this. Let's head on over to the next one that we have 100 shares in. This is in this account. ABR ticker symbol ABR, Arbor Realty Trust. We have, let's see, we're really taking a hit in this one, but we are down. We have 130.04 shares. I really still do like Arbor Realty Trust, and is reasonably priced. They pay a solid dividend, a really good company. They're just taking a beating because of what's going on with the federal interest rates. And then the SVB debacle did not help at all. But I really do like, again, the makeup of the company. They have a lot of buildings and real estate and multifamily housing, senior housing. So again, nursing homes and senior, living communities. Also some hospitals and commercial real estate. So again, it's not heavily into residential real estate, but more so like senior housing, apartment buildings, things like that. So it's taking a hit right now. I mean, we're down almost 25%, but I am looking to get 200 shares into this. It was 150, but because it's down and because it's $11 and some change, I think we can get to 200 shares in this quickly. And the dividend is still paying us. This pays a really, really good dividend. Let me scroll down and see. Okay, March 17th. You see this right here? $46.09 we got in a dividend. So while we are waiting, and let me just tell you, everything is down in the stock market. If you're in VTI, if you are in SCHD, if you're in VOO, QQQ, everything is down. Okay. Nothing is immune from this stock market that we're in right now. Everything is down, but that's why you have to believe in the things that you own. But yeah, we have 100 shares there. And I believe the third one we have 100 shares in this particular portfolio is QYLD. Now, this is strictly for income because we plan on retiring in a few years, retiring early anyway. We really want to build this up to achieve income. We have 257.66 shares in QYLD. We are down almost 5%, but look at this. We have a dividend pending for $43.54. We got a dividend from them March 1st or March 2nd, and now we're getting another one March 28th. So make sure you stay tuned for our March dividend update, because we are in the record books when it comes to dividends from our taxable accounts, not a 401k, not a Roth, not an IRA, not an HSA, just from like Robinhood and Interactive Brokers taxable accounts. You're going to see that these principles, simple principles that I talk about here on the channel often work. So yeah, we have that there, and we would like to get to 300 shares there and then pause and see whatever our other plans are. So those are the three we have here in Robinhood. I'm going to share the other two in Interactive Brokers, and that will equal 5 positions that we have 100 or more shares in. All right, guys. So we're here in Interactive Brokers. So JEPI is the 4th position that we have over 100 shares in. We actually have over 500 shares in this. But again, we're in Interactive Brokers. You can see that I am on the desktop version. So Interactive Brokers is really good more for like technical analysis if you want to do charting and have indicators and things like that. But yeah, I want to show you guys our position. So I did scroll down some, and you can see right here our market value is $26,662. And we have 500.21 shares. I'm going to zoom in so that you guys can see. Our average cost is $55.37, and our cost basis is, and this is how much we actually put into this position, $27,700. So we're down about 3.6% or a little under $1,000. Again, the market is the market, but guess what? JEPI paid out a very nice dividend in March. It is over $200, and I will share that in our dividend report for March. So again, if you want to see all the real numbers and see how we're actually structuring our accounts to get, income monthly on a monthly basis, then again, make sure you subscribe, like, and share. So, and then the final one I wanted to point out was SCHD. Let me pull that up. So we are here, SCHD. Again, we have this position over in Interactive Brokers. We really, really do like SCHD. I do our updates on this often so that you guys can actually see our progress with, this particular fund. This is a fund. So JEPI is also a fund as well. But Realty Income is an individual stock. So is ABR. That's an individual stock. But QYLD, JEPI, and SCHD are all funds. So again, that's a little bit more conservative because it's not just like one particular stock. It's a basket of companies. But yeah, so let me take you to the position. Okay, so you can see our position right here is actually valued at $16,334. We currently have 230.25 shares. So our short-term goal for 2023 was 250. So we're 20 shares, less than 20 shares away from that. So I am excited. SCHD also pays out a nice dividend in the month of March, which is cool. Now we are down quite a bit in this. We are down about $1,261. Again, there's a lot of bad things going on in the market right now. With the SVB debacle, there was some issues with Charles Schwab. Would they be able to survive? And they are. But again, fear and panic is in the market right now. There's a lot of fear. So I'm continuing to buy SCHD. I'm actually going to, by the time you see our next SCHD update, we will have achieved this goal. We will have gotten 250 shares, probably a little bit more, because I'm buying on the dips and we have our tax refund. My husband gets a bonus in April, a really big one. So again, we're going to be investing heavily into companies and funds we believe in. And while we're waiting for the stock market to kind of turn around, we're just going to sit back and collect our dividend. But you can see our cost basis is about $17,600. So again, we believe in this. We put our money where our mouth is, for lack of a better term. We believe in the things that we invest in. And that's what my tip is to you guys. Whatever you're putting your money in, if it's a dividend company, a growth company, blue chips, startup companies, whatever it is, you have to believe in it, right? Can you hold on through the ups and downs in the stock market, right? Can you hold on when it's red everywhere? If you can do that, you're going to realize that you're going to be able to build your wealth much, much quicker, because you're buying when all of these good companies and funds are at a discount. So I just wanted to come on and talk with you guys about this today and show you, that, we have over 100 shares. I mean, a lot over 100 shares by a lot in several of the 5 positions that I showed you today, but we didn't start there. Every, 100 shares you see someone have started out with 1 share. So if you are just consistent, you will be surprised at how quickly you can build up your share sizes and as a result, build up your dividend income. So again, that's the video, guys. I hope that you all enjoyed it. Please make sure you like, share, and subscribe. Don't forget to check out my podcast on my other channel. Information is always down below. If you are looking for some help, I am running a sale. Check out the sale. It ends again this Saturday, April 1st. So make sure you take advantage of that. But leave me some comments down below. Let me know how you're doing. Do you have 100 shares in any of your position? Are you working towards 100 shares? Let me know so that I can, cheer you on. Again, don't forget to like, share, and subscribe. Hit the bell notification button and follow me over on Instagram. I post often over there. But again, until next time, I'll see you guys in the next one. Bye-bye for now.